Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business and maybe poke a little fun at it along the way. Today we're diving into a proxy statement. Don't worry, it's not as dull as it sounds. Think of it as a behind the scenes look at how a company is run, plus a peek at potential drama. This is a Planet Fitness Inc. proxy statement. Basically, it's the document they send to stockholders so they can vote on important company matters. These matters range from electing board members to huge changes like merging with someone else. Think of it as a corporate ballot. Now, this is amendment number 2, so they already had to fix something twice. It amends the original definitive proxy statement. We will try to see if it's something spicy or some accountant level boring stuff. Turns out it was mostly accountant level boring stuff, amendment no. 2 was made to correct the characterization of proposal 6 to reflect that it is a routine matter. The first few pages contain a notice of the annual meeting. This meeting, which happens on May 6, 2025, is when stockholders get to vote. Because it's 2025, it's virtual only, so no one has to put on real pants. There are minor causes for the stockholders to vote on, ranging from the election of directors, the ratification of KPMG as their accounting firm, approval of executive compensation, and other things. There's also some highlights on the page referring to no poison pills or risk oversight. It summarizes key points like having no poison pill, independent compensation consultants, and risk oversight by the board and its committees. This is all about showing they are transparent and accountable. Moving on, proposal 1, election of directors. Planet Fitness has a classified board, meaning not all directors are up for election every year. This year, 3 Class I directors need to be re-elected. Craig Benson, Cami Dunaway, and Christopher Tanko. Let's look at the nominee profiles. They're all experienced professionals, which is what you'd expect. The board wants you to vote for all 3, but it's your choice. There's a skills matrix that lists the key skills and experience of all 8 of their board members. This includes things like brand marketing, public company experience, and financial expertise. They also include certain demographic information about the board. The next section covers corporate governance. There's a description of each of the board's committees: audit, compensation, and nominating and corporate governance. The audit committee oversees financial reporting and risk management. The compensation committee sets executive pay, and the nominating and corporate governance committee handles board nominations and corporate governance policies. Let's move on to the audit fees. KPMG is the independent accounting firm, and there are details on how much they got paid and what they did. Let's see the actual bill. In 2024, audit fees were $2.44 million. Tax fees were $1.4 million. All of it adds up to a total of almost $39 million, more than the $3.7 million from the prior year. The audit committee is recommending that stockholders vote for ratifying KPMG as the company's independent registered public accounting firm. This is where things get interesting: executive compensation. There were a lot of executive changes in 2024, with Garvin and Colleen Keating and Jay Starnes joining as CEO and CFO respectively. It's like a corporate game of musical chairs. They saw a revenue of $1.2 billion and system-wide sales increase 5%. Not bad numbers. The compensation committee determined to grant our executives incentives. For 2024, annual bonuses for our named executive officers were exclusively corporate goals. The specific performance goals under the annual bonus plan are chosen by the compensation committee based on their impact on our profitability and the importance of such goal to the near-term success of the company. There's a table summarizing pay for Colleen Keating, Jay Starnes, Bill Bode, Jennifer Simmons, Craig Benson, and Thomas Fitzgerald. Tim Colleen Keating, who became CEO in 2024, received total compensation of almost $11 million. That's a good year if you can get it. Then Gov Benson received $284,000 and Jay Starnes $585,000. And Jay Starnes $500 to approve the compensation for their named executive officers. The document then lists the outstanding equity awards at the end of 2024. The most important thing on this page is that it lists how much money each of the executives made as part of their salary and bonuses and where their incentives are. The company has a clawback policy, so they can recover any incentive-based compensation from the executives if there was fraud. There's a big required section about the relationship between executive compensation and the company's financial performance. Tubby, okay? There's a lot of jargon here, so let's skip to the fun stuff. Here are the numbers. Adjusted EBITDA was almost $490 million and net income was $174 million. That means Planet Fitness made a lot of money to play around with, and that it's definitely a very healthy business. Now, who owns Planet Fitness Cleasers? BlackRock owns about 12% of the company, followed by the Vanguard Group with about 9.6%, and T. Rowe Price Investment Management with 9.4%. Not bad. This gives them a lot of influence. It seems like everyone filed their required ownership reports on time, except for one small delay. There are several complex legal agreements between Planet Fitness and its previous owner, like registration rights agreements and tax receivable agreements. We are not going to dive into it since it requires a law degree to understand. The audit committee reviewed the financial statements, discussed everything with the auditors, and they are signing off that everything is in order. Here are some of the proposals for stockholders to vote on. One proposal is to remove supermajority voting requirements in the charter. Basically, it would make it easier for stockholders to make changes. This can be a good thing because it empowers shareholders and avoids the company from digging in its heels. Another proposal is to remove obsolete provisions. Again, cleaning house and making the legal documents less complicated. The final proposal is to limit the liability of certain officers, which would protect company officials from certain lawsuits, making it easier to attract talented people to the executive team. For my take on Planet Fitness. They brought in a new CEO and CFO. Those executive changes signal a shift in strategy. They clearly want someone with more long-term vision and probably a better handle on company finances. Their revenue numbers look solid, but those long-term financial obligations with the earlier owners have the potential to hurt them in the future, and it's a major thing to watch. So to sum it up, Planet Fitness is growing and making all the right moves, but it has a complex ownership structure that can impact the future growth and potential for profitability. Thanks for tuning in to Corporate Decoder. If you enjoyed this deep dive, please hit that like button, leave a comment, and subscribe for more financial analyses.